Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings with a smirk and a magnifying glass. Today we're diving into Iron Horse Acquisitions, Corp's latest report, which is basically a time capsule of their recent business stats. Before we get into the nitty-gritty, if you like your financial news served straight up with no chaser and a side of common sense, make sure you're subscribed. And hey, while you're at it, join our Discord channel linked in the description below for more real-time intel. So what's the big news here? Well, it looks like Iron Horse Acquisitions Corp is getting ready to merge with another company. It's not a done deal yet, but they've made some adjustments to their agreement to make it happen. Think of it like rescheduling a wedding date when you need a little extra time to sort out the guest list. This is a current report, meaning they're updating us on something important that's happening right now. And the date that kicked this whole thing off was August 31, 2025. And in case I forgot to mention it, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Now, about Iron Horse Acquisitions Corp itself, what exactly are they dealing with? They are a company that deals in units. These units are like a bundled package designed for investors. Each unit is made up of one share of regular stock, one redeemable warrant, and one right that gives the holder a tiny piece of another share of common stock. This setup is common for companies looking to raise money through public offerings. The common stock is the basic ownership stake in the company. Then there are the redeemable warrants. These are like options. They give the holder the right to buy more shares of common stock at a specific price, which in this case is $11.50 per share. And finally, the rights these give the holder a claim to a fraction of a common stock share. All of Iron Horse's securities are traded on the Nasdaq Stock Market LLC. This is a major stock exchange, so it suggests they are a publicly traded company aiming for a certain level of visibility and liquidity. Now, here's an interesting tidbit. Iron Horse has checked the box indicating that it is an emerging growth company. This means they qualify for certain regulatory flexibilities that are designed to help newer and smaller companies get off the ground. They have not elected to use the extended transition period for complying with new financial accounting standards, which means they're staying on the fast track for financial reporting. Let's get to the heart of the matter, the actual business combination agreement. Back on December 18, 2024, Iron Horse signed a deal to combine with another company, essentially agreeing to merge. The other parties involved are Rosie Sea Holdings Limited, which is the seller, and Zhong Guoliang 2 Group Limited, a subsidiary of the seller. The big update in this report is an amendment to that original merger agreement. They've pushed back the deadline for the merger to be completed. Originally, they had until September 15, 2025. It's a small extension, but it signals that negotiations or preparations might be taking a bit longer than initially anticipated. Moving on to other events, the shareholders of Iron Horse gave their thumbs up to this merger deal and other related proposals on June 2025. So the shareholders are on board, but the merger is still pending, meaning it's not finalized yet. Here's a really important consequence of this whole deal. Because of how the shares are being exchanged and considering any potential redemptions by existing shareholders, Iron Horse expects to become a controlled company once the merger is complete. What does that mean? Essentially, one entity will hold more than half of the voting power in the company. This gives that entity significant control over the board of directors. Now, being a controlled company isn't a bad thing in itself, but it does come with certain options. Nasdaq has rules for corporate governance, things like having independent directors on your board or having a compensation committee made up of independent folks. Companies that are controlled companies can choose to skip some of these rules. This can be beneficial for the controlling entity as they can maintain tighter control without needing approval from a majority of independent directors on certain matters. Iron Horse acknowledges this. They explicitly state that while they will meet the criteria for being a controlled company, they don't plan to take advantage of these waivers right now. However, they're keeping the door open, saying this decision could change later. This basically means they want the flexibility to opt out of certain corporate governance rules if it becomes strategically beneficial for them in the future, provided they continue to meet the controlled company definition. It's a strategic move that gives them future options without committing to them up front. The most significant exhibit here is Exhibit 2.1. This is the actual amendment to the merger agreement that we discussed. It's the legal document that spells out the extended deadline. And then there's Exhibit 104, which is basically the digital header for all the data in this report, presented in a way that computers can easily read and process. The report is signed by Jose Antonio Bengoechea, the Chief Executive Officer of Iron Horse Acquisitions Corp, dated September 3, 2025. Now let's put on our analyst hats and look at the story this filing tells. Iron Horse Acquisitions Corp is in the midst of a significant transition and business combination. The extension of the merger deadline is a minor flag, but not necessarily a red one. It suggests that the parties involved are working through the details diligently and want to ensure they have enough time to get everything right. The most telling part is their impending status as a controlled company. This indicates that the merger is expected to result in a concentration of voting power, likely with the seller or its ultimate owners. For investors, this means understanding who the controlling entity will be, and their strategy for the combined company is paramount. While Iron Horse is currently opting out of the controlled company exemptions, meaning they're sticking to standard Nasdaq governance rules, for now they've explicitly reserved the right to change this later. This creates a potential future risk or opportunity depending on your perspective. If they invoke these exemptions, it could mean less independent oversight on critical decisions. However, for a company aiming for rapid growth or specific strategic maneuvers, a more centralized decision-making process can sometimes be more efficient. The company structure with units, warrants, and rights is typical for a special purpose acquisition company or SPAC. The success hinges on the business combination itself and the future performance of the target company. We don't have financial tables in this particular report, so we can't assess current revenues or profits directly, but the focus here is purely on the procedural and structural changes related to the merger. The key takeaway is that Iron Horse Acquisitions Corp is on the cusp of a major change. The amended agreement simply adjusts the timeline. The more significant implication is the shift towards a controlled company structure post-merger, which could influence future governance and strategic direction. Keep an eye on who the ultimate controller will be and what their long-term vision is for the combined entity. Alright, that's our breakdown of Iron Horse Acquisitions Corp's latest filing. What's your take on these developments and what they signal for the company's future? Do you think opting out of controlled company rules now, but reserving the right to change later, is a smart move or a potential red flag? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description. Thanks for watching. See you next time.